Whenever I'm researching for potential new investments, I do a quick scan on a company to see if they possess the 3 S's. And this company really does. Okay, let's look into it. The company is Silverbullet Data Systems. SBDS is ticker. What do? They have 2 parts of the business which add value to each other: 4D AI contextual data platform and data-driven customer experience services. Okay. Now, the 4D platform, it's a proprietary 4D AI platform, is designed to enable advertisers to target consumers in a privacy-first post-cookie world. Don't worry, I'll explain that, but it's very important in the digital marketing world. There's a seismic shift that's about to happen, which is very good for Silverbullet Data Systems. And then, of course, this product, is a natural extension to its existing marketing transformation services, which already serves a blue chip client base, including, and these are some of the companies they work with, okay? You see here, huge: Heineken, Mars, ITV, Green King, Sony, Best Buy, Lego, BMW, Johnson & Johnson, Dell, Snickers, all well-known brands. And Channel 4 right there, okay? No, the 3 S's, this is what they are, okay? Size. It's very important if you want to get a multiple return on your money. So UK's best stock market performers over the last 1, 3, and 5 years, and I look at this on a yearly basis, 60% of them had a market capitalization below 100 million before they made the big move. 40% of them are below 50 million. It's very important when you're looking for companies because there's so many listed companies, over 2,000 listed companies. You can't focus on all of them. So if you just focus on the area where the best performers are, you pick a winner. So this company is 15.6 million, okay, at 97.5 pence. That's the market cap. So it is a nano cap, which I like. Special. What does it have as special? They have this 4D AI platform, like it says. It is AI technology that can help its clients achieve a better return on investment and navigate a seismic shift that's happening within this market. Scale, also very important. Can the company scale at low cost and therefore maintain good operational margins? It's also the market, can they scale into? Is the market they're scaling into big, commercial, and growing? So first of all, these are the forecast margins, okay? Gross margins, 80% plus, EBITDA margins, about 30% plus, and operational margins, 15, probably close to 20% once they're fully mature. Also, the market they can scale into, is it big, commercial, and growing? Do you know what? There's not a lot bigger than the digital advertising market. This is it. Huge. The growth is growing and it's massive. Like I said, forecast to be about 740 billion worth at 2024, going up to, I don't know, almost $1 trillion by 2030 probably. So it's huge, massive opportunity. And these are the sort of segments: video advertising, of course, big, search advertising. But there's a seismic shift happening within this market, okay? And it's all about these things. For years, brands have been using third-party cookies to track website visitors and collect data that helps them target ads to their audiences. Third-party tracking cookies are text files that sit in your website browser, and they collect data about you, okay? And they collect data such as clicks, shopping preferences, device specification, location, and search history, okay? This is how it works. This is you or me in glasses, no face, but glasses on the top. Say you visit a website, okay? That website there sells stuff. They put cookies in your browser, okay? Then you leave that website and you go to another website. And all of a sudden you're seeing adverts on this website from this website. So hopefully you'll click that, go back and buy. Now, since GDPR, I'm sure we've all heard of that, and the e-privacy directive came into force, it affects how website owners may use cookies and online tracking of visitors. Mozilla Firefox and Apple Safari have introduced new features in their web browsers to prevent cross-site tracking. This third-party cookies they're getting rid of, and so have turned off the support for these third-party cookies. But the biggest player in the market by far is Google Chrome. Look at that, 65% of the market they have, okay? 19% is Safari. So these two have already switched it off. So when is this going to happen? And they say they plan to completely deprecate third-party cookies in the second half of 2024. They're dragging their feet a bit. It was supposed to be, in 2023, but they are going to do it this year, or 2024 today. And like I said, Google has been the market leader in online advertising for over a decade. More than 80%, Alphabet is their adult company, the parent company, of course, not adult, parent company, of their revenue comes from Google Ads, which generates around $225 billion. Huge. That's just one player. So without these third-party tracking cookies, how do advertisers target potential customers? And they use Silverbullet. And of course, this is their client base and growing, even the US Army. So like I said, two sides of the business that add value to each other. There's the data, the AI platform 4D, and there's customer services, okay? Let's look at, first of all, because this is a very exciting product. Advanced contextual targeting and insights. That's what it's all about, right? 4D is a privacy-first contextual intelligence cloud-based platform that seeks to improve brand engagement and market ROI, which the board believes will enable the group to deliver highly scalable revenues at low marginal costs, okay? So how does it work? So it doesn't track the user. Like I said, it reads web content and not cookies and IDs, ensuring display and video ads are placed in relevant environments based on the context of a web page, not the individual user, okay? So their software can read video adverts, connected TV, and tell sort of brands or advertisers, this site is safe, it's suitable, and it's relevant for you. And you probably get a better return on your money if you advertise there, okay? So you can see with Google Ads pop up anyway. So if you are, if the user goes to a site that's not in line with a brand that's popping up the adverts on the site, then it's not relevant, is it? It shouldn't be there. Certain brands wouldn't want to appear on certain websites, as you can see, but it doesn't happen with this 4D product. So how good is it? That's the thing, isn't it? It's got to work. Look at this. Some of us, they only launched fully. They've been developing for years, and development costs have been quite high. But pretty much now it's done. There will be iterations, of course, but the major bulk of the development is done. But as of 30th of June, so this is last year, they had 30 clients, brands, and 10 agencies were either signed up or trialing 4D. These are some of them: AXA, Bupa, IPG, Mediacom, P&G. Disney is also tried, and Samsung. Mediacom, by the way, is part of WPP, one of the biggest advertising agencies in the world. Okay, Samsung, VW. This was a year back. Okay, this is in June, over a year back now. They were testing this or trialing it, or they'd signed up to it. Okay, so AXA, this is how it went for them. It's a big company. The proof is they improved, their increase in video completion rate by 35%, over a third, by using 4D. Green King, okay, they want to raise awareness. The results there, 1.7 times more bookings than 2 legacy contextual solutions. 56% more clicks leading to landing page views. Okay. Nintendo, another one who used it, 74% view through rate, 38% more completed views, and 27% less eCPVC. Okay, so it's working on. Now look at this one. This is very impressive. In a trial with Renault, the 4D solution was pitted against a contextual advertising solution offered by Google. So this is what Google offers to people, and they pitted against 4D versus Google's offering. Okay, for Renault, outperformed the competitor solution across all metrics, achieving 133% increase in click-through rates and a 51% increase in page views. That's huge. So Google's offering was smashed by 4D. Who are its competitors? Worth looking at. Okay, now there are plenty out there who do contextual advertising, but 4D is a bit different. I'll explain why. But the board believes the company's main competitors for the 4D product are Google, Oracle's Grapeshot, Peer39, and Double Verify. Okay, Grapeshot is a contextual intelligence platform that provides brand safety and contextual targeting solutions. Grapeshot was acquired by Oracle in 2018 for $325 million, and now is closely integrated with Oracle Data Cloud and the Moat measurement product. Okay, so $325 million, and 4D is 15.5. Double Verify provides media transparency and accountability to deliver impressions quality to maximize advertising performance. In 2020, Double Verify, which was founded in 2008, reported revenues of $243 million. In April 2021, Double Verify listed on the New York Stock Exchange with an opening valuation of $5.6 billion. So they're big players. So what sets 4D apart from its competitors? Like I said, there are quite a few platforms out there that do contextual. They look at the context in which adverts are going to be placed or potentially going to be placed. And they're looking at text and meta tags and all that kind of stuff. What's different here? The competitors, so the target ads, is computer vision. You know, when you open your phone with your face, I don't mean touching your nose on the numbers. I mean, it recognizes your face. You know, that's what they do. Essentially, they use computer vision to read YouTube videos, TV shows for broadcasters, and connected TV platforms, then Netflix streaming things, so that they can sell ad inventory for a premium price, knowing the ad is in the perfect context as well as the right audience. So computer vision is a bit different when it comes to context. Okay, this is how it works. Essentially, 4D is already integrated with a number of the world's largest DSPs, including those operated by Trade Desk and Adform. So these are advertisers here, hundreds of brands, demand-side platforms. These are programmatic platforms that do it automatically, and this plugs in here. In fact, companies can use it on its own, but it's normally between a DSP and a supply-side platform. And you plug that in, and it'll give you a dashboard of figures and metrics telling you exactly how well your advert would, work in certain websites, contexts, whatever. Okay, and they can see the best for them, for their brand, and of course, then they can buy that advertising, and they'll get a cut of their revenue there. But these programmatic platforms are huge, and they generate billions and billions of spend every year, and that's where they're plugged in. So the customer experience for years it's been doing very well. Like I said, they're doing pretty much brought in by clients to look at their data and leverage it. So this is an example. Channel 4, when Channel 4 launched, all 4, of course, digital product. They wanted to set up a platform, Adtech sort of selling platform, sell inventory and all that stuff. And that's what they did. They came in, Silverbullet's team, and had many discussions with them, sort out this platform, and so they generate new revenue through the use of consumer data. That's what they wanted. Design a new ad tech ecosystem to execute media buying. So big sort of projects there. Create a data-centric culture throughout the business and explore intelligent marketing strategies and activation measures. Of course, if you got a lot of people visiting your website, you got a lot of data, and Silverbullet can help you organize that data, and so you can get better results from it, essentially, and set up platforms, systems, and streams, to help companies do that. So the results: data center of business, and 83% overall recognition, uplifting using brand match, 180% uplift in orders there, and 53% net uplift for spontaneous brand awareness. And this is David Amodio, head of digital innovation, Channel 4, said, with digital platforms constantly evolving, we truly found expertise and support from Silverbullet was second to none. They helped us better identify and capitalize on business opportunities through the power of data. The Silverbullet team has and continues to work closely with us to uncover customer insights and maximize its return on investment. And by the way, it's a selection of the group's key partners here. So the marketing tech partners, Adobe, Salesforce, all these partners, Oracle, all these big companies, Adtech, Adform, Display Video, MediaMath, massive companies here, and consulting agencies they work with as well, Local Planet, Accenture, Deloitte, all that. Okay. Silverbullet's employees hold the formal certifications from technology platforms, so Adobe Manager, Architect, Adobe Manager Business Practitioner, Adobe Sales Specialist, Technical Sales, Adform, Google, Oracle, all their platforms as well. So they're a very highly qualified team that work with businesses to help them get a better return on their data. So let's have a quick look at growth, value, health, efficiency, momentum, and forecasts of Silverbullet. Okay, now, like I said, at 97.5 pence, they are a 15.6 million market cap company. These are the interim results to the 30th of June, so 6 months, H1, up to the 30th of June. That's a cut-off period, and they published these on the 28th of September, so not that long ago. They had a 79% growth in revenue to 4.16 million. Their 4D product, remember, this was only sort of launched in Q4, pretty much, going back last year, but 122% growth to 1.22. It's from a small base, but it's expected to continue growing very, very quickly. The other part of the business, grew by 65%, 2.94 million. So that's both sides of the business are going very quickly. Like I said, these are results for the year. This is the growth they achieved. And these are improvements basically on the operating growth. They were still loss-making then. And this is interim results, improvements here. This is top-line growth. And these are the improvements on the thing, okay? These are a broker forecast. They're slightly off because the 4D product took a bit longer to launch and develop because of COVID and all that stuff. But so you can sort of maybe shift these out by 6 months, maybe. But as you can see, the growth is very good from 2.7, 3.8, 6.3, doubling to 13.5 or 3.6, 22 million. They're going to be profitable, or close to being profitable, in 2023. Then 2024, they are going to be profitable. And you can see here the margins are very good. Gross margins forecast above 80, EBITDA margins above 30. Okay, and you can see the value here. If they stayed at this level, this price, they'd be on a PE of 3.4, which is frankly ridiculous. You could put that on a 20, 30 EV for a fast-growing tech company. So you times that by 10. But here's my forecast. I've adjusted for that, say, 6-month delay, and you see top line is still growing very nicely. I've been a bit more conservative about the growth, but nevertheless, it's impressive. When I see the green columns here, this is, by the way, these are the years. The E means expected, and this is the gross profit, EBITDA, operating profit, and you see the growth here, and the margins are excellent. So on these multiples, a 3 for sales, 10 for EBITDA, 15 for pre-tax, 20 for post-tax. Then the average there, you're looking at this kind of return. I mean, bigger basically, but a return, potential returns, 2024, we're talking about 135% up on where we are now for 2024. Remember, shares tend to get there before the actual year because that's what's coming, okay? For 2025, I'm looking around at a 344% return, and the share price will be £4.46, okay? If there's a concern, there's cash levels on the 30th of June, they had 677,000. For the 6 months to the 30th of June, the operating cash outflow decreased 59% from 3 million to 1.2. This means their cash burn for H1 was around about 200,000. And that's going to be around about the same going forward, or even less, because, like I said, the reason why the cash burn down went massively because they had development costs for 4D, the AI product, which obviously takes a long time. It's very intricate, sophisticated product, so it takes a lot of developers. But now the final development is done, then many developers have moved on elsewhere, and they have just a core now of people working on the iterations of that. But it's not a big development team because it is now commercial, so it's now in revenue and generating revenue. Okay. So if they continue with this cost base for the next 6 months and they achieve, say, top line of 30% growth from H2 on H1, they generate about 5.4 million in the second half. This would put them at a break-even level. It's a goal the management seem confident in achieving. As they state in their interims, they say we have strong visibility on full-year revenues and continue to carefully manage our investment in talent and other operating costs. As the company matures, we are steadily moving towards a position of positive EBITDA in early 2024. As a result, the board is optimistic about the outlook and views the future with confidence. Like I said, do your own research. It's always better when you have a company that's close, the cash, and think about, are they going to raise money or not? Then you should always think they probably will raise money, and they did say in their going concern they probably will need to raise money. But having said that, I did watch another interview where they said don't need to raise money, and someone, in fact, it's worth looking at. Someone asked a question, said, "I'd like to put 150 grand in at £1.50. Is that possible, please?" And they said, "Well, you have to do it in the market because we're not raising money at the moment." So it's encouraging, but it's always worth having that in your head, thinking, okay, they may need to raise, who knows? But I shouldn't see them having any problem raising when you have a business growing that quickly and you're on the cusp of profitability. And this is a very exciting, huge area undergoing a seismic shift with third-party cookies deprecation. So I think this company, like I said, is quite special in a small space. There aren't very many companies, especially on AIM, in this space, growing, tech in a big market, a massive market that's growing and is changing to the benefit of Silverbullet. So please do your own research. I'm very excited about this company, as you can tell, so I'm probably biased, but I think it has the potential to turn multiples on my initial investment. Hopefully, fingers crossed. Thanks for watching.